I want to get a sense of how you see today shaping up. We've seen a big rotation out of tech into other cyclical names. How do you view that today?
Yeah, I think tech's just kind of a little bit on its back foot here as everybody's waiting Nvidia's earnings, of course. It's obviously right front and center here now that we're a week removed from Jackson Hole. I also think it's just a little bit of a consolidation. For me, looking at the way the market came out of that April 2nd to 5th volatility event, it was pretty clean. So I think the fact that we're consolidating back is actually really healthy. I'd almost be concerned if we continued to run. There's other parts of the market right now that are moving. Look at small caps. They traded higher on Friday, sort of breaking out from the pattern from the past week. But I wouldn't be surprised to see everything kind of settle in a little bit this week. And it's going to lean into how Nvidia and not only what they do, but how the market interprets their earnings report on Wednesday.
Bill, that's really interesting. We just did a story about Goldman Sachs believing that we could hit a fresh record high this week, and you're actually talking about a pullback. I don't know if you're talking correction or pullback overall. So I want to get your Wex word of the day. How would you play today with that thought that we could see actually a pullback?
Yeah, I mean, I am playing a little bit of a pullback. Personally, myself, I'm positioning a little bit short and how I'm trading things on in my futures fund, futures and commodities. And but overall, I remain pretty bullish. So I think the important way to look at it, and with the Wex word of the day, is nimble. You want to stay nimble. Strong opinions held weakly. So I think in this environment right here, there's money to be made on both sides, depending what your time frame is. It's important to be nimble.
All right, so you got to be nimble. So coming up, we have a big event, Nvidia earnings. I just want to get a sense of how you see Nvidia earnings. You actually gave us a playbook if Nvidia misses. I'm not saying that you're saying it's going to miss, but if it misses, you're focusing on three factors: median sector performance during cut cycles, which we believe we're in right now, rolling annual correlation to the U.S. dollar, also median sector performance after the yield curve uninverts, so very close to it uninverting. What are you looking for? What are these three factors? What are they going to help you find when it comes to stocks?
Yeah, let's be clear. Nvidia is our largest position. It's kind of leg in leg with Apple and Amazon. I'm pretty heavy tech in how I'm positioning portfolios on our wealth side at Blue Line Capital. And I hope to see a solid report here. I think they can. I think the Huawei data that we've seen from them kind of falling behind on providing to the Chinese companies, and what Nvidia's talked about with the China-centric, a regulated chip here coming out of the U.S., I think that's important. I think they have a strong report. But if they miss, I think, you have to look at other places: healthcare, financials. One of the things that we're really liking to lean into is materials. And those three factors that you just discussed that we're looking at really favor materials. So we're kind of looking at contingency plans. If Nvidia misses, or if the market interprets their report poorly, it could put tech on hold for, a couple months.
So, Bill, I know you're also looking at energy. We're going to show a chart of the moves in these different sectors: industrials, energy, and materials. Since Friday, of course, Jackson Hole, where Jay Powell really seemed to indicate we are going to get those cuts. Energy had the biggest jump since then. Is the idea here that the cuts are going to help the energy sector, or are you also looking at some of those Middle East tensions giving the energy sector a bit of a boost?
Well, there's no doubt that the tensions out of the Middle East really got things, started to move higher at the end of last week. Early this week as well. Of course, the force majeure in Libya. That's a lot of barrels right there on the line. So that also aided crude oil to get back above $77. We're very heavy in energy relative to the S&P. We sit about 15% weighted in energy, and the S&P roughly about 3% weighted in energy. So I like to look at our portfolio, how it's relative to the S&P, and what areas can I outperform. Yes, we're heavy tech, but what other areas can be a backbone or a ballast if tech falters?
All right, so you're heavy tech, but you actually gave us two picks today well outside of the tech sector. I'm looking at Chubb, hit a high yesterday, and also CF Industries. That's a materials play. Why these two names right now?
Well, Chubb is a great way to sort of diversify away from tech. I mean, they're very steady earnings, very steady revenue. Warren Buffett it's been a top pick of his. Even though he's been selling Apple, he's been leaning into Chubb. And if it's good enough for Warren Buffett, it's good enough for me. I say that facetiously, but very solid business. And you're seeing that with the price action of the stock. The insurance space has been very strong as well. Now, with CF Industries, ammonia prices have been very strong here the last couple of months. They're actually a very low multiple. And materials, upon those factors that you had mentioned that a little bit ago here, those are very favorable, especially if the U.S. dollar is weaker. Now, the U.S. dollar, I do think, is a little oversold maybe recently in the past couple of days. So keep an eye on that. But this favors CF Industries as we look to move out very low, again, very low multiple, strong ammonia prices, and I like the way that they could be sort of a centerpiece within some of the hydrogen economy that everybody's talking about.
So, Bill, almost out of time, but I want to ask you one other question. Dividends, is that also a factor? Looking at CF, dividend just about 2.5%, Chubb, lower dividend, almost 1.5%.
Yeah, I think dividends are important as you start to see rates come down. And actually, if the market is trying to find leadership, tech isn't a leader within the market, you're going to start to see money gravitate towards dividends as treasury yields come down. So I think it's a very important thing to consider.